This is the MTPredictor weekly market update for January 5th of 2014 is our first weekly market update for the new year. And it's been a few weeks as I took a nice little vacation there. But let's get back to it and kind of see where the markets went. Again, we anticipated that we'd get one last rally into the end of the year, into Christmas and the end of the year. And then things should begin to correct a bit. Let's look at the this is the Nasdaq here, and you can see it unfolded as a nice 5-wave pattern here into the minimum wave 5 resistance and has begun to correct. This is the daily chart here. Typically you get a correction, back to, in this case, this level. It's sitting around 33.90, we'll call it 33.95. Make it nice and even there. 94.95. So you can see we had sellers overcoming buyers. The peak there right in the minimum wave 5, so we'll see if this continues in the NQ. Don't expect a straight line down there, but maybe a ABC type corrective move. And then if we do sell off down into this level, this should be a significant level of support. And if this holds as support, then the trend which was up prior should continue up. But we'll see how far this thing goes here. And let's just kind of take a look at the other markets here. So there's the S&P correcting a bit. But let's go to the bigger picture here. Start with the monthly again. And look back. Here's the last significant swing here. We're going to take our decision point tool, as this will give us the area of resistance from the terms of the monthly chart. You can see right at the top of it. We were pretty confident we'd see the 1800, and then it again rallied. We have strength on the STF here, telling us that there would be more upside ahead. You can see just about touching the gray band back in here, and that's why we figured we'd get an overshoot into 1800, and we're currently around 1825 there, right at the top of this level. And we've got, so far, you got a little red sellers candle forming. That's for the current month of January here. But we'll see now if this, if we get a solid close above this decision point level and that high gets taken out, then they may just continue to run this. But if they're not able to do that, then we should get that selling that we've seen in terms of the daily chart here. Let's take a peek at the weekly chart here, and you can see that was a little wave 3. We came right into the typical wave 3 resistance in terms of the weekly chart. So let's look at where the wave 4 pullback, go down wave 4 here. Alright, so we'd be looking at a pullback around 1760, 62, 63 area in the ES. Based on the pattern there. And then let's see, take a peek at the Dow. There's your weekly chart. Again, let's look at the I just want to look at the daily chart here for a second. You can see we reached the typical wave 5. We went through the minimum wave 5 into the typical wave 5 resistance. Again, we can take a decision point here. Typically you'd see a pullback back around this 15,500 to 520 area. And so we'll see. We have some strength on the STF here, which is indicating there may be more upside ahead. So this pullback may be a little shallow. We'll have to watch. May not reach this level here. Maybe a little shallow. Now, in terms of the bigger picture, before I leave the E-minis, here's your Dow. This is a 100-year chart of the Dow, courtesy of stockcharts.com. And there's this broadening formation that I've been pointing out in the weekly market update for months. But you've got this series of higher highs and lower lows, and it makes that kind of called broadening formation or megaphone type pattern. And that's usually a very bearish pattern. As you see, you draw a trend line at the top here, and we're coming into that trend line resistance, and we should expect this thing to fall. All right, and that's certainly could happen, and that's typically what does happen with that formation. But we have had an instance where we've had a broadening formation in the past, going back in the early teens and 20s, 1920s. Here you had a succession of higher highs here and lower lows, and so there was a broadening formation back during this period. And you see what happened is they, let's say this was the next top here at this point. Well, they just took it out and they ran the market up into the late 20s, of course the roaring 20s here, and then things fell apart. That's when you had the crash. But that took maybe another 4 or 5 years after they took out the this broadening formation took off. So that's a possibility too. As interest rates remain low, we know there's we know we've got a little Fed tapering to the tune of about $10 billion a month, from the 85 billion down to 75 billion. But we still have easing, and you've got the interest rate swaps going on behind the scenes that are keeping the interest rates low, and obviously the government knows which direction interest rates are going to go, and so they can make bets on that. If you know which way the direction of that market is going to go, then those are pretty good bets. But they're keeping interest rates low anyway, despite the fact that the Fed is doing some easing. And as the saying goes, long story short, if interest rates are low, stocks will grow. So if the interest rates remain low, by low I mean below 5%, historically, the market does very well. In fact, if the interest rates are 2.5% or less, then market tends to return on average over the last 50 plus years now about 15%. And it goes down, those returns go down as interest rates go back up, and as you cross the 5% threshold for inflation or interest rates, then it pretty much kills the returns in the market. So, we have this ominous broadening formation, and certainly could, we could begin a massive, correction or crash at this point. Or we could do as they did, is we could have another 4 or 5 years of a run through that level, and then maybe the big unwinding. We'll see. It's just going to be an interesting time. Anyway, that's those markets. Let's look at silver here, because we had gotten a little bounce. Things kind of consolidating in here. Your target down there around 1750. If we look and you see, I'm just going to kind of go back here. Most of these turning points, if we're looking at silver here on the weekly chart, is associated with some high volume. So you had a turning point here, you had high volume, here. This turning point, more high volume here at this turning point. Some high volume here at this turning point. Again, high volume in here at this turning point. High volume here at the wave 3 low, that rally into wave 4, which was more high volume, came in and it turned. I'm not seeing the high volume in there yet. So I'm not convinced, the stops are at break even in there on any shorts at this point. So not convinced that this is going to be a market turn here yet in silver. It could be, and I could certainly be wrong, but I don't see the volume coming in like we see at most of the turns there yet. Alright, so we'll keep an eye on that. Let's see the euro here. This is the weekly chart of the euro. Just finished this little kind of 5-wave pattern up here into that minimum wave 5 resistance, so we could see some corrective action. Yeah, that's the wave 4. I want the DP here, see where the correction might go to, down in this level here, right around 32.20 in terms of the weekly chart anyway. Daily chart is just looking a little more. We had decision point resistance come in here, and we got a turn, and we've reached some decision point support here in terms of the daily chart. So we could get a little bounce in here now that we've reached that level. But the bigger correction, if they take this level out here, could be down into that 3220 area. All right, let's. I'm just going to wrap it up here. I just wanted to do a quick update to kind of kick off the year here and kind of see where we went. But we did anticipate that last move higher into the holiday and into the end of the year, and we started correcting a bit here early in January. We'll see if that correction is shallow or if it gets some fall through, and we'll kind of go from there. So enjoy the weekend, and we'll see you back next week, our first full week of trading in the new year here.